Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Marco, how are you?
Good. How are you? How's everything?
Good, man. I'm good. Another
Awesome.
day, another market up 10 to 30 basis points. Just creepy crawler all the way up. It's again, interesting times. The one thing I would point to today in what's interesting is, you had a couple of the big names, which led us over the last week. They're not so hot today. They maybe just pausing a little bit. Not saying that they're completely falling out of bed, but they're pausing a little bit, which is a little bit concerning. We have the banks. Some of them did well. We've Wells Fargo. We've been looking at that call spread and, people sort of playing the 40, 45, 42, 47 call spread in Wells Fargo. That was up. JP Morgan down a little bit. Goldman Sachs blowout quarter. That was good for Morgan Stanley. And I don't know how good it's going to be for the CS First Boston when that comes out. But Citibank is tomorrow. So you got the banks sort of, up and down a little bit. Nothing, super, crazy in either direction. Although the strength in Wells Fargo is a positive sign. The one thing I guess we should start with, we had a Webbush downgrade in Facebook today, right? And they upgraded. He also upgraded Snap and raised targets in
Twitter.
Snap and Twitter. Yeah, Twitter. Yep. So that's interesting. So let's go through that first.
Okay.
And just sort of take a look at Facebook and see exactly what's going on, because we've been talking about Facebook on the podcast positive for a while. The stock has gone from 255, 260 all the way up to 310. We want to make sure that we understand as a group that obviously stocks don't go up in a straight arrow unless you're the SPY and it goes up every day for 4 months. But the something like Facebook. Oops, sorry. Let me get that in here. Where are you, Facebook? Let's do it this way. Facebook. I did it again, huh? Facebook, and then we're going to go make it a little bit bigger for you. All right, so Facebook, this is where we sort of had the stock somewhere around here. We had this flag and it's kind of moved straight up here. So now you can look at it in a couple of ways. We can say we had this that we were looking at and sort of this with this. So we had this it's kind of what we're looking at. Then this break above here with support. This looks good. There's nothing really bad here. What we did want everybody to notice was that people were buying, when we were here, they were buying the 285s. They were buying the 290s. They're buying the 300s, maybe even the 310s. Okay. And how do we know we're buying them? Well, we saw it as it was going on live, but we also could sort of look at, I'm going to look at the open interest. So let's just call the open interest. Looking at calls here. So in the open interest on April 16th, which is this Friday, we had the 280s, even the 275s, 280s, 285s, 290s, 295s, 300s. In general, when things are moving up like this, most people are holding their calls for a while. They're riding their calls until it goes higher. We did see some shuffling over the last couple of days, people moving out to April 23rd. See, this one was moved out here, the 310s. But what you're seeing is a lot of call activity that people are holding as best they can for as long as they can, right? Because they bought it for, say, $5 to $8 in the 280s, and then in the 300s. In the 280s, they were probably about $9, $10, going all the way up. So they're buying these. They own. You talk about 3.5 million. So 3.5, 9. That's 12.5, 15 million, 22 million, 31 million, call it, and 47, 48. So let's call it 50 million, 60 million, 60 million plus 60 is 65, 6.5 million shares. Is that right? 6.5. So it's 3,000 would be 300,000. So 6.5 million shares going all the way up. That's 65,000 options. So 6.5 million shares that, if these were all long, which many of them were, would be for sale. When you start seeing 10s and 15s here, 15,000, this might have been sold up here. But when you start seeing this 8,000, or call it 9,000, 16,000, 10,000, and 7,000, just in this pocket between 295 and call it 315, there's a lot there, millions of shares, and those calls will eventually come for sale. Now, will they roll them? Well, that's the big question, and so we've been waiting to see that. But May, you have the 310s. Remember, when it was 3 weeks ago, the further you go out and then you want to buy earnings, it costs a lot of money, and people like to play that breakout that we were looking at here. They like playing this as it's starting to move up here and looking for that breakout for the technicals. But to buy earnings, it does get expensive. Yeah. And with that, what usually happens here is it gets, because of the congestion, the stock, they call it pinning, right? The stock gets pinned somewhere in this vicinity, right? It's going to have a hard time blasting through all this because there is a lot of open interest here and a lot of call selling that is putting downward pressure on stock. Then you get a Webb-Bush downgrade on the stock, and the stock is down 2% and trading around this 300 level. So you have a couple of days left with 300 as something that's interesting, and then you had some put buying probably recently that's over here. So you have a little bit of congestion in the 295 to 305 range, and once that's done, okay, so we have, if this market ever wants to take a break and you have a week off of the market just going straight up and maybe it just goes sideways or down a little bit, then you can get Facebook back down here right into the earnings pocket. So earnings are coming in let's see here. The earnings are coming in in about 2 weeks, April 28th. And then we're starting to see some setups here of buying or rolling out, it appears, from these April 16, 23rds into things like 310 calls, the 315 calls. This might have been rolled down, I'm not sure, but I suspect both of these are buying more, is what I suspect. Both of them are buying more and rolling out of the Aprils. So that's in Facebook, and I just wanted to point that out, that it's, the target is 340, but we think there's a stop because going through the April expiration and so much call buying and call activity, it makes it harder. Not saying that it can't blast through. It just makes it harder to actually go through it. I look at it as if they were stop signs, if you will, for the stock. So that's how I would look at Facebook and how to think of it. But we are seeing call buying, which is sort of what we want to see for the April earnings.
Right.
Okay. Does that make sense?
Yeah, that's a good one.
All right, good. Now he also upgraded Snap, and I think Snap is, it's a name we like, we own. One thing I wanted to discuss here was I think it's interesting, and I'll leave it for everyone to think about it on their own. We're long. Let's call it. We're long further out calls here. Let's call it the Mays. We're long the May 65s, and they cost, let's call it 415, 430. And you can now, today, the stock was up. Snap was up pretty good in the morning on this upgrade, $75 target stock price. But here's a situation where, because we're long May, we want to see the earnings. It's likely we're not going to get, stopped out. So we're going to have a full position going into earnings. You could take off a third if you want ahead of the earnings. I think you're in it because you're in it to win it. So I think that's good. If it's up 100%, for sure, take a third off. Yeah. And if you are nervous and you want to take a third off, then take a third off. It's not the end of the world. But I think we're in it for the earnings because they were buyers for the earnings. And I think that because the stock is up here and now volatility is creeping up, you see the implied vol is basically, implied vols go up. That doesn't mean that much with the earnings coming. It just means that the prices are holding. Okay, they're not decaying. But what you have here is, if I look at the April 23rd, which is the day after earnings. So earnings are the 22nd, probably in the afternoon. I have to check that. But you wake up, it's Friday, and you get 1 day to trade it. I'm looking here at the 80 calls, or even the 77 calls. But if you paid, just to make the math easier, you paid $4, let's call it, for the 65 calls out in May, you can sell the 80 calls today. These were $1 this morning, right at the get-go. So that's why it struck me as like, these are probably a great sale. The 80 calls are a great sale against the May 65 calls that were long. So this gives you a little bit of it helps reduce some of the costs, right? So if it was say you paid 430, whatever it was, and you can sell it at $1 in the morning when you see it pop because the stock moves, it might pop again tomorrow, and that thing goes again to $1, maybe $1.25. But you're able to sell those really small options, because if it does get to 80, okay, if it gets to 80, this goes to 0. Okay, it's the last day. So on that Friday, it goes to 80. That goes to 0, and those snap options are worth, let's call it 15 and a half or so. Okay, so 15 and a half less the 4 minus 1, call it 3.25 that you paid for it. It's over 300% returns on that trade. So 350. So it's something to think about. I'm not saying to actually do it. I'm just saying it helps reduce the volatility of returns. Where it messes up is, of course, if Snap has a blowout earnings, they're super confident about everything, and the market's up, and Snap is trading 85, and now you got the 80s are out at $5, and you're not participating above 80. So you did get the 300% win, but you're not now. If you didn't do anything, it was going to be 450. So this is where I would say to consider. It's something to consider. It reduces costs. It does reduce a little bit of volatility of returns. It does take a sliver off. So if you're thinking about taking one off instead of those, maybe take, the 75s, at $1.25. Today, those were $1.60. Take $1.60 off on the 75s. $4, $4.25 less than $1.60 is $2.60. Now you got a $260 option instead of a $4.15 or $4.25 option, whatever was paid. So these are the types of things I think about. I usually don't. I say it to people who know a little bit more about options. It's a little bit more dynamic. It's not just let's just wait and see and take the layers. You're sort of dynamically trying to take some pieces off the table by owning these calls and knowing that you want to wait for the earnings. So that's something I think is worthwhile, a worthwhile strategy to think about in names that were long going into the earnings, and Snap is one of them right now. So is that fair? Is that clear?
I like that. I'm going to be thinking about it today.
Yeah, I mean, exactly. So, I mean, as this, you got to move. These things aren't going to move that much because of the earnings. So you do get a $2, $3 move. They'll move 30, 40, 50 cents, and you'll be able to take a sliver off and say, okay, what could I live with? In these things, you really have to ask yourself, what if it goes to 100? What if it goes to 100? Can I live with the fact that I just sold it at the top? I have a $4 option. I've reduced my costs by $1, and I can only, so it's $3. It can only make 10. Say the 75 calls, it can only make valued at 10, so they can only make 7. 3 into 7, that's 2 1/3, 230. Can I live with 233% if the thing blasts off?
Yeah,
that's what you got. That's the real question, and it's an important question because it'll drive you crazy because you can do it 3 times, and the fourth one, the stock. What if it gets taken out? Oh, you're literally got to take 3 walks around the block and just talking to yourself. So these are the things I want. It's not without risk. It's not without, we're playing it because we like the story. The augmented reality part of the story, I think, is really interesting. People buying clothes off of Snap. They're trying to be the next TikTok. They're paying $1 million a day to get people to, it's the best advertising they can do. Pay $1 million and get people floating, tons and tons of content on get every influencer in the world, trying to make that money. I think it's a great story. And I think that with augmented reality, they're going to, the advertising, by the way, this is the bear story. Let's talk about the bear case a little bit for Snap. The bear case is that, and it got drilled with Pinterest and some of the others, is that this thing called IDFA. I think it's IDFA or IFDA. IDFA, ID. It's basically an ID, and it's identifier. And Apple, everybody who's got an Apple phone has this IDFA or this identifier, and so that identifier basically tracks you. tracks where you're going, what you're doing, what you're buying, what you're seeing, how long your phone is sitting idle. It's tracking everything. And the marketers, people like Facebook, people like Snap, anyone who has apps, okay, they're using that identifier to push the ads they want you to see from their app. Okay.
Right.
So Apple is basically saying, they said this very quietly. They said this about 7 months ago, and it hasn't been talked that much. And I mean, if you listen to the earnings calls and you read the earnings transcripts, and I do, there's always questions about what's happening with this. Now, there's the real bear camp that says advertising and marketing is going back to the caveman days. Like, people don't understand how valuable it is until it's gone, right? Until, hey, how come all of a sudden you're going to start getting ads about things that you don't care about? And it's just going to be floating all over because they're not going to be able, it's just going to be, when you advertise, you can advertise very direct advertising, or you can advertise like Coca-Cola does and Ford does, branding, right? So they just blast it. 1 million people see it, even though someone's 60 years old, 75 years old, and they don't want to buy a new car anymore. They're seeing Ford no matter what. Coca-Cola, same thing. Without the targeting, it becomes advertising becomes very, very expensive for the people. It puts a lot of people out of business. So this was a big deal that Apple did this. It's a huge deal. And it goes to the point that the winners of all this will people who have first party data, which means someone like Snap, someone like Facebook, someone like Google. Those are the survivors. Apple, clearly, the more you're on Apple's products, the more data they have to send you the right targeted. So this is something that is it's you're not hearing a lot of it in the mainstream media, but when you should go online and look at IDFA and read about it. It's just type in what is IDFA and understand what it is. But I gave you the basics, and people will be able to opt out of tracking. Okay,
Right.
but then you got to take in, there's a lot of free. People give a lot of things free because they're able to make money on advertising. Without them making money on advertising, the free stuff is going to become paid. Okay, people can't make money. The advertising model gets stunted a little bit. So, it's something that I consider, but I think that ultimately advertising dollars are going to find a way somehow. Maybe that pushes people more to Snap, who comes up with an augmented reality and does advertising with retail stores to get, being able to see the clothes on you just by taking a picture of yourself and saying, I want that. How does it look on me? And the augmented reality shows, bam, right there. And it shows how the dress looks on you, how the sneakers look on you. And you can dress yourself and see yourself by taking a picture. That's pretty cool. And I think people ultimately will find ways, companies and people will find ways to interact with that. That'll be interesting. So that's Snap. We're along that. Pinterest, very similar type of idea. All of these, Twitter, he has it at neutral, but Twitter's been doing well, in the last few weeks. So that's something. Those are the three social media names that we tend to look at. Facebook, call buying still. I still think a good market. Somebody's telling us the earnings are going to be good. The flow's been going that way. They think it goes to 330, 340. It reached 310. Maybe it goes higher, but 330, 340 is where we started. That's what we're going to stick to right now. And it might take a couple of weeks of digesting that quick move. And let's see what the market does and how the market plays out.
Definitely. Yeah.
Okay.
Okay.
All right. Good.
Awesome.
What else are you seeing here?
One of the other ones I've seen was Disney.
Disney. What do we got in Disney?
Check.
Disney is wow. What a move. It's incredible, this stock. So many kids have one share of Disney, right? Because the parents buy them one share. It's like stock's gonna go to 1 million. Okay, so what do you say? May 21s here?
May 21s, yeah.
May 21s call buying, maybe here. Not sure here. Open interest. This is what you're looking at. 7,000 versus 10,000. So, I saw this a couple of weeks ago. I'd have to check. It looked like somebody was hedging, buying the 180 puts, selling the 200, even the 210 calls. It looked like they were buying these and selling these sort of. Let's take a look at that was Facebook. Disney. Incredible run here. Parks reopening. So you got, let's go even 1 year. All right. So you got Disney here, and stock looks tremendous. Doesn't even look like the top was, anything that was scary to people. Usually tops look like what they look like, more like that, right? And you don't see that here. You sort of see, this measured move. Okay, so we got here, and they were looking at 80, 200, even to 210. Okay, so let's call it somewhere right around there, 210. This we were seeing over the course of this move down, right? It started around 200 to the 195. We were seeing this type of, I was seeing the 180s, 200 as a collar, buy or you can call it reversal, risk reversal. The buying the 180 puts on the 200s. The fact that I see this trade in, it's difficult to. It'll be difficult to look at. What we can see here. It seems to me that they might be buying back that call now that the stock hits close to 80, came back again, 182, and now they're just maybe taking off the structure. But what do we see here in the morning? Came in, vol went up from the morning, shifted up a point. Let's just see here. $2. These are the 301, 304. So what I'm looking at is I'm trying to look at the IV. The IV trading in the morning started 30.1. Because it's such a thick stock, it's hard to move it. But to move it a point, a decent amount. It looks to me like that's a buy.
Okay.
It looks to me like that's a buy just by gazing at the IV and sort of seeing how the white bar moved higher and then sort of drifted a little bit off. Also, stock moving higher, right? So stock moving up, 200 calls probably bought. But what I'm saying is that it looks like these are bought to close, and maybe they sold half of these to close as well. So I think that is a closing transaction. Someone had, the reality is, let's put ourselves in the shoes of who we think it might be, right? If we thought it was someone who does those types of trades, it's like a BlackRock doing that type of trade. I don't know if it was them, but it's one of those big guys doing a trade where they're basically saying, okay, maybe they start right here, right? Let's call that. They say, okay, I have 10 million shares to go in Disney. I don't know how many I own, but let's just look at it here. We're looking at Melvin here, Disney. Okay, BlackRock. Oh, calls and puts. See,
Nice.
Not making it up. So BlackRock. Here we go. Come on. What are they doing? What are they doing to me? All right, BlackRock. What's that ad? Top silver opportunity. Okay. Sucker for some good ads. BlackRock, Disney. They own 115 million shares, $20 million. They have 1.3 million in calls, so they have 13,000 calls, and they had 1,700 puts. So I think what you should see here is that BlackRock does play in options when they have to, but if they have 115 million shares and the order comes up, you're the trader at BlackRock, and you're sitting there, and a ticket comes on the desk, and it says, stock hits 200. I want to sell 30 million shares of Disney. Okay, so that lands on your desk. Now, you're not trying to sell 30 million shares in, 3 days. You're probably going to say, okay, 30 million shares, 3 million shares a day. It's going to take me 10, 12, 15 days. That's 2 weeks it might take me. So I might be a big seller of Disney, 3 million shares each day in Disney for the next 2-3 weeks. Okay. And lo and behold, it goes from here straight down here. And as it gets over here, pops up a little bit. Once you're done selling, comes in and buys it back. So, did they make a little bit of money? Maybe, but maybe he just protected and, maybe he only made $1 on that structure. Nonetheless, he's, they're trying to protect against their own selling, if you will, right? Against their own selling. So they're selling stock, they protect, and they try to make a little bit of money. If you made a little bit of money, maybe you put that trade on at plus, I don't know, plus $4, plus $5, and they're taking it off now at 180 is 3, and they're taking it off back at flat. You see how that is flat? So
I
they
see.
took in $4 or $5, right? The stock is down. Stock is down 10, 11, but they took in $4 or $5. That's a win, right? That's a
Nice.
win. So that's how the trader there. That's how he's expected to find ways to make money off of their big flow, right? If you have 30 million shares for sale and the stock's trading near the highs, where do you think it's going? They're thinking we're probably going to be pushing it down. Okay. And once we push it down to 3%, then people say, I'm getting out of this because it's weak, and they push it down in further. So, that's just the name of the game. But I think it's a good opportunity to see how they might trade this. And in fact, frankly, it looks, if they were selling it and they were just selling it just because, now the stock has sort of recaptured the 50-day and is looking strong here. I mean, this is a very, very strong stock. This hasn't, had every opportunity to try to come back. It didn't. It held this sort of level here, 180, 182. I mean, what can you say? Unless this breaks right here, below 180, you probably start thinking, okay, it starts getting down here. Okay. The 200, maybe 160, where it was. Just let's move that up here. Somewhere around here. This is 155. So somewhere around here, if it breaks 180, you could start seeing a drop closer to 160. But you have everything going in the right direction at Disney, and the stock looks strong. So that's all I'll say there.
Cool. All right.
What else we got? How about eBay? Did you see this eBay? eBay is something to think about. We're long eBay. We like it. I mean, we should have taken some profits already, but maybe someone's riding it here to the end. On the third, the stock is, it's a good story here, and it takes time. It does take time. eBay's a name that was basically left for dead, right? Nobody was on it. The trust factor on eBay was lost. People join these stocks or use these companies. Remember, it's online. The minute you lose trust, that's a big problem for any of these. Imagine Amazon lost trust. Apple, you stop using the products. You're nervous about what could happen, or why would you use it, or you're buying fake goods. Like, what if Amazon had problems with groceries? All of a sudden, people say, you know what? I'll just go to Walmart, or I'll just actually walk to Whole Foods now. It's still Amazon, but I'll just walk there and buy it there. So, there's this element of trust, and eBay lost that trust over the years. They brought in Elliott Associates, Elliott Management. They came in and they brought in their CEO. Eventually they got out of the name, but the new CEO has been doing a fantastic job. The main thing they've been doing over the last, call it 6 months, is trying to rebuild that trust. Right. So they did things with like luxury watches. Basically, you buy luxury watch. If it's fake, you just return it. We'll give you all the money back. These are things that people say, oh, great. You buy, a woman buys a Louis Vuitton bag and it's not real. Take it back.
Yep.
eBay will builds trust. At all costs, we can't lose trust. They're also, you talk about this nifty site. What do you call that? Digital art. So digital art is all the craze now. And what is it attracting? It's attracting some of these collectibles. Well, these collectibles are all over, they're all over eBay, right? So you have baseball collectors, you have sneakers, watches. These are hot areas of the collectors' paradise, if you will, right now, that it's exploding. Things are exploding over there. I don't know if anybody's watching it. It's exploding. And eBay's right in the middle of that. They have now, if you just Google eBay and you look at their sneaker area, they have every sneaker you can want. They sell more sneakers than almost anybody in the world. By the way, by every minute they sell X number of sneakers. They have 180, 200 million eyeballs on them looking at the stores one. So when you get those people back and get them active, eBay is a really interesting stock long term. And I think trust doesn't come in 3 months, but when you take a look 1 year out, when you take a look 2 years out, and you start seeing people, over the last 2 years, somebody has made 0 purchases on eBay, right? No trust. To, you know what? I bought these sneakers. I got the certificate. I feel comfortable. I'm going to buy the next pair. I think I got a deal. I'm going to buy the next pair, and I'm going to be searching for bargains, right? And when you do that and you start increasing your transactions, that transaction increases trust. So what I would be looking for in like the earnings is how are the repeat buyers doing, right? If the repeat buyers are coming back, it's showing that trust being built. And I think that's where the story in eBay can catch fire. This is a stock I think easily can double, if they can build that trust back. And they have 180 million. They talk about first data, and Apple, and they have all the first data they want. They see what people are buying. And when you have that many people and you have that type of trust, you can easily build new businesses and go. So eBay to me is something that is very, very interesting story. It's still in the early innings of building trust. And I think that the stock will be good. I'm looking for pullbacks, and I'm going to try to get in that name again if I can get a nice pullback, because I think it's that good of a story. So that's something that it's interesting. Rudy, I got in Coinbase at 381. Whoa.
It opened at 402.
Whoa, that's crazy. That is crazy. That's crazy. I just see that. Wow. Wow. Okay. Good luck. Good luck, Rudy. So that's my story on eBay, on something to think about. But talking about Coinbase, I mean, if you talk about Coinbase, it brings up Roblox. Roblox is a name, and I saw we've been seeing some activity there. Even though the stock's trading down, we have the May 80 100 call spreads. Did you see that today?
Yes.
The May 80s in Roblox. Here it is, popped up right here. So here's something where, again, one of these crazy type names, but I'm sorry, May 70s, 70, is that what it is, or 80s? Now we saw the 80s, but now the 70s are trading as well. These might have been sold here, I'm not sure, but these look like they were bought. So it looks like they came in right in the morning. You could see the volume there, all spreads. The vol was picked up here a little bit. So yesterday was 84. So these were all trading at 90 vol, and it looks like they bought the 80s to then sell the 100 calls at around 350. So I have it about 9 and 350. So they paid $5.50 for the $5.50 for the 80 100 call spread, 80 100 call spread,
Okay.
and the stock traded off significantly. It was off a lot earlier today. I suspect if you bought Roblox or you owned it, I'm not sure they're allowed to sell it, but let's just say you bought it on the open and the stock is trading, you made a little bit of money here. The 80 100 call spread at, let's call it $5, 15 to make 15, 5 to make 15, it's 3 to 1. Seems a lot safer than owning the stock that's moving around, $10 a day, 7 to 10% a day. I think somebody, maybe they bought the stock here, but I think somebody bought the stock as it came off and have rolled their stock into that call spread. So that's what I think it is. I don't think it's as bullish as it may seem. I think somebody's just saying, we like the name, we think it's going up. Obviously, they don't think it's going up explosively because they sold the 100 calls, but they're willing to play the game and stay in that name. So that's something that's interesting. What else are we seeing?
But what do we like? KSS?
KSS, good name. The good name, but it's had a major run. The activists popped up today. So they made an announcement today that I saw in let's see here. It was a group of hedge funds that actually came in to buy the stock. They bought the stock, and now they're trying to change the board of directors. So those are activist companies. You can be an activist by yourself, or you can be an activist and bring in 10 hedge fund friends that you like, accumulate all your shares together, and say we're going to act, in the same manner. The SEC, once you get up to 10%, if you're acting alone, you have to actually file. Even if you're acting as a group and you're talking about being an activist, they force you to file as well as a group. So this group came up with 9.3% of what they owned. It's interesting that they stayed under 10% because there's rules, SEC rules. Once you get to 10%, you have to do the rules are stricter for a 10% holder. So they stay under the 10%. They bought stock and they bought calls. They're long. It's interesting, on the day of the announcement, the stock is actually down, and but you could see here this was a decent sized level, right? You had this gap over here. The stock has just been on a massive run from 22 almost straight up. I mean, you have like a pause. Let's call it, what's this? Pause right around 40, but essentially it went 22, 40, and then 56. It was, I'm sorry, 64. Tremendous run. what I'm looking at is this a little bit lower, this going down, and this going down as well, right? The MACD. So a little bit of a MACD diversion, although you could say this wasn't a high, but high enough. If it turns here, you could see a pullback, maybe even to catch this 48 move, but the activists are in there. They're trying to make changes. Obviously they're bullish. I think we're seeing, what are you seeing? Call buying or put buying?
Yes, it looks like call buying in October.
Call buying. So makes sense. These things take time to get somebody on the board, and although this doesn't look like a buy, I
That
don't
looks
think
like a sell, and the other one looks like a buy.
okay. So this, I could see them doing that. Okay, so buying this, selling probably to close here. So they probably had this from a while back, I would guess. And this right here, 62.5, that is probably getting long. Okay, so getting long, let's just see. Spike up, 56, 54.5. Okay, 54. What was it? Okay, so 54 was paying up. And I just want to check these. 85s. The implied vol today came in about 53, and this traded at 49.7. Okay, so this was sold, and the other one, this vol was down on the day, and the other vol was up on the day. So that tells me that this was a buy. Like you said, you called it correct. This was a buy, and this was a sale. So buying, call it 3,000 of these at $8 is 2.4 million bucks. So getting long this, getting out of this. Look, these things take time. You got to get elected to the board of directors. You got to have a plan. You got to convince the board to activate that plan. There's a lot going on. It takes time. And what I suspect is when you see these things, the announcement comes out, these people have been buying the stock from here all the way here. They make the announcement, and then it's 60. How much of it was already built in from these guys all getting long here? Now that was the big reveal. That was the big announcement. That's what they're looking for. Now what? If you get a tough tape, and we've been talking about retail puts for sale, maybe this thing comes back. I don't know the full story. I have to read a little bit. I saw things revolving around real estate, and they wanted them to sell some real estate, work on the branding. We've talked about the branding at cold stores. They have a little bit of there's a disconnect, right? They have a lot of they're putting stuff in there that's I don't want to say it's not giving. They don't have their own brands, so they're getting a lot of used stuff, and they're having arguments with Under Armour, and they're losing a lot of their own sort of anything that would bring people into the store, brands that would bring people into the store. So that's cold stores. Obviously, the reopen is good. So it's good news today. The stock is down, which makes me think that some of that news was already built in. And we got a 40. Remember, you got 4 hedge funds involved in the name. That probably means there's a lot of other guys that are also tagging along here and there. They're all trying to get out a little bit here, or at least take that position down. Okay, so that's cold stores.
Let me ask you.
Go ahead.
I guess everybody wants to know, Tesla. Every now and then you talk about Tesla.
Yeah, here's Tesla. So here's something that people can look at. I'll give you something that people can look at, and how look. We're at Options Geek, the premium service. We're playing 2, 3 month, 4 month, sometimes even 6 month options. That's what we're looking. We're looking for that big move, and trying to find that big move. When I look at Tesla, Tesla's a tradable stock, but you got to be, I don't know, day trading can be difficult, but possible. I mean, people are doing it. People trade this stuff like water. But I want to show you something that I think you can use, everyone can use as one of the tools, I guess, in their arsenal for them to let's see here. Just want to make sure I have the right settings. Okay, so I just have this is a 30-day, 30-minute graph. And I just want to let's just look at Tesla here. So, we talk about, when we're looking at stocks, we talk about the ABC setup, ABCD, whatever they call it, right? It's Elliott wave, up, you can look at it like this, up, down, up, right? Or you can look at it as down,
up, down,
up, down, right? Okay, so these are basically the two ones that I look at. There's there's like a 5 count and an 8 count, and you can dig as deep as you want in the Elliott wave. I think it's really interesting stuff. It has helped me out over time, but the reality is, I think I keep things, just me personally, I try to keep things as simple as possible. I like to look for the blatant ones that I see, and maybe make a call on that if I'm trading it. But what I see here is the way to think about it is I would say take the low here. So that's 590, right? 590, and then we would go to the high. So how much is this? You're going to do some math here, Marco.
Was that
590,
710?
590 to, let's call it 709, 708, 590 to 708
118.
is 118.
Yep.
And then 118 to 666 is how much? 118 plus 666.
784.
How much?
784.
784.
Yeah.
784 is right here. Okay, so 784. So when I see something make a move like Tesla did, it's a bullish move. It's positive. I'm watching it. It makes a move here. I'm watching it. It makes a move down here to sort of like this level. Okay. And then the next move I'm looking at is I'm looking for this move again. So that would be from here. I would have said, how many days did it take? It took 1, 2, 3 on the 4th day, right? It took 3 days, but on the 4th day it was up. So this would be, you can either count it here, 1, 2, 3, 4th day, or you can count it maybe from here, 1, 2, 3, 4th day, but it should be close to 3, 4 days. And if you did that, then you would have it from here going without seeing anything. What I'm saying to you is I don't look at it here. I don't look at it here. What I do is I start looking at it right around here. And it, on this move up, I'm saying, okay, it's kind of got this pattern here. Here, you don't know if the pattern's there. You don't know if the pattern's there. You don't know if the pattern's there. You have no idea if the pattern's there. But all of a sudden, it starts moving the market up here, and it starts getting interesting. And right around here, you're looking at the pattern. But here, I'm thinking, okay, the pattern's live. 1, 2, 3. So this thing probably gets to about 780. Give it a 780, 785, somewhere around there, right? X marks the spot, somewhere around.
Yep.
Somewhere around there. So when it gets up to 780 on the morning or in that morning, it's like that's your signal, right? Your signal. You're not going to catch the dollar move. You're not going to catch, you probably think about, even if you miss it and it turns down on that moment or during that day, but you want to start basically hedging or trying to take, if you're playing the weekly options, right around 780, I would say 777, 780, 782, right? We're layering in, and in Tesla, it's not an easy thing to do because the options are high. So it's a big boy game on Tesla, but that's where I would start, layering in. And if it moves up and kind of trickles down and then all of a sudden does like it's doing this dance for a day and doesn't go down, then, okay, you're talking about if you quote it anywhere at 780 on average, it trades down to 742, that's 38. That's 5% move. That's a 5% move in 15 minutes that you catch on Tesla. That's how, you could use certain little things that you watch, or I personally watch this stuff. I think it's pretty cool. I think it does a good job on all different time frames. We're watching, I show you obviously the frames that I'm doing, the horizontal lines. I'm watching breakouts and breakdowns. I'm watching the 50-day and the 200-day moving averages as sort of magnets in case things move. And I'm watching gaps. I keep it, as far as technicals go, I keep it really simple, because there's so much to possibly trade and so many possible signals that it should be the simplest signals, the one that are very clear, that should give you sort of the, ultimately close to the answer, right? Ultimate close to the answer.
Yeah.
So that's just, I know a lot of people like to day trade Tesla. That's one tool in your arsenal. People have a million things that the way they look at it. They look at RSI, they look at the highs, lows. There's a million ways to slice it. So that's just one thing that I want to show you, but you can do it and it repeats over and over. It's Elliott waves. I would be, I'm a big proponent of telling people, just go look at it. I'm not saying to do it. Everybody has to find what fits for them and what speaks to them. But I'm saying, go take a look at it. DMARC, we mentioned yesterday, It's good enough for Steve Cohen. It's good enough for me to take a look at it, right? I mean, he has the guy on literally on his cell phone at all times, right? He pays him a lot of money just to take that call. Look, there's something there, right? If Steve Cohen, who trades every day, all day for the last 30 years, if he feels like he needs this guy by his side to give him his, I'm sure it's not 100%. Obviously, it's not 100%, but it's good enough with he's taking that with his own process to manage. He's got his own process. It's just one piece of the puzzle. So I'm trying to show you, and there's articles. I don't know if you looked at it, but you can go Google Steve Cohen and Tom DeMark. I think there's a great Fortune interview, and he talks a little bit about that. But look, that it's what are we doing? Options analysis, which is basically digging into what the hedge fund guy is thinking, right? And then we're using our own technical analysis, again, drawing in another tool. There's market data that people can use, and we offer a place to find that stuff. So these are all the things that you need to start doing to bringing in the puzzle, right? We're also then returning back to the search for earnings and the earnings transcript. So again, this is the process. This is how we're doing it, and this is what we're looking for.
Great, I love it.
All right, Tesla. Yeah. There you go.
Tesla. Nice. Related to Tesla, maybe NIO.
NIO, sure. NIO's chart looks pretty bad, frankly. I mean, it just doesn't look enticing. It just looks pretty bad. You look at this chart, and it needs a little bit of help here. It's almost a perfect bear flag. So it's got to break out with some, need it to break. Like you look at Tesla, and Tesla's done a great job of coming over its 50-day, right? That, we were talking about the 50-day was putting pressure on it. You had a buy target or a raise of a target by someone to 10,000. Stock broke right through that. It's trading off. We'll see what happens now on the way down. If it holds that level to make another move up, obviously it's going to need the market a little bit, but this name is it's like a perfect bear flag, which if you're looking at the flags, you would say 65 to 32. You would just, I can do another one. You would just take that and put it right down here. So 37.5 goes off the page. So I'm going to move it this way. It gets you to 6.5. Not going to happen, likely. Not going to happen. But, usually what happens is, they start going like, it finds a floor and it goes something like this. So it'll be 1, 2, and then it's moving this way. So make no mistake. Look, I don't know if I'm not gonna say it's never gonna happen. I don't know if $5 will happen, but I think that there's some value in NIO at some point. I do believe that they're gonna try to get the week longs out, and then they'll take it up. But I don't know what that point is or how it gets there. What are we seeing in NIO? Is there any
earnings play? Seems
so. Earnings are in a couple of weeks. Let's see, next month. So earnings next month. We have Tesla at the end of the month, early May. So what are we seeing here? June.
Seems, yep.
Let's see, June here. Come on. June 40s. So the June 35. So this is interesting. Let's just see the puts. There's a lot of open interest and a lot of trading, but let's see here. 290 IV. Let's just look here because so 67 was yesterday, and this traded on the bid, close to the bid, but the IV, is it going up or down? Going down, 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 down. Okay, so looks like it was probably sold actually. Let's take a look. 299, 290, 287, 91, 92 with the stock here. So let's take a look right around here. 67, 68, 67, 66, 67, 67. Okay, so it looks like it actually might have been sold. So that's interesting because what it's basically saying, when they're selling this out, somebody walked in and says, I have the 35 puts, stock's down 2%, and I no longer want to be long these puts at $3. So if you see here, in order to own them, your risk reward is at this point 28.30. So you got to be thinking sort of 27-ish, right? 27, maybe even 26. So 27, 26. So we call it 26 and a half somewhere. let's call it 27.26, and that's how you get the point here. So that's where, you know, if you're going to own these at $3, you got to, in order to own them, which is you're far from out of the money here, 37.5, you're about 7% out of the money, 8% of money. So you need a large move down, and $3 would take you down to 26. So what's that? 37.5 to 26 is down 30%. So can Tesla go down 30%? Someone is saying, I don't think so anymore. Over here, it looks like they were long, and someone's saying, I don't think so. They're probably long these here, and probably this one is starting to be more like already a full-time short. So this is interesting, right? It's basically saying they've got out of some of these, they're getting out maybe some of these, and you know, this is telling you 30, this is telling you 26. So I suspect that they've raised their sort of where they think that they would buy is closer to 30-ish, right? Closer to 30-ish, 29.30, not 26. That's what it's telling you when they're selling it. Look, if they thought it was going, let's talk extremes. If they thought it was going to 10, they wouldn't sell those, right? So somewhere, if they thought it was going to 10, they definitely wouldn't sell those. So somewhere along the analysis, they're saying, if I think it's here, I think it's going here, okay? Or I think it's going to say 29.30, right? And I'm long the 35 puts at $3. That no longer makes sense. And so that's why they sell it. It's important to, you know, the way we're backing it out is by doing that. Now they have the 40s, and the 40s say 30 to 29.30, and that still fits. So they're saying, okay, I'm going to still lighten up here. I still want to be short. I just don't want to be short these anymore. So I'm taking off half. I've only taken off a sixth, a seventh, 1/7, 15% of these. I've taken off half of these. Does that make sense?
Yeah, I see.
Okay, so again, it's always risk reward. It's always, can it get there? Where do I need it to get to make this trade still valid? And they're constantly looking at and evaluating that. They're evaluating where they think it's going versus the price that they're marked at. Okay, they're marked at, they have 20,000 options. They're marked at $3. Should we still, you know, my boss would walk in when stocks are moving down, or you know, they've held this for several weeks now. He'd walk in and be like, the first thing he'd say is like, Felix, should we be long these things? Like if I think 20, 30 bucks, I mean, it doesn't make sense to own something for $3 and out of money option to own for $3 and think that I'm only going to make $3. So it's got to go to 6 for, it got to go to 29 just to make 100%. They don't like that. That's flipping a coin for them. They don't like that. You know, remember, they're in there. It's $3. I better be making, it better have a chance to get to 10. So then he's calling his analyst and he's saying, hey, can NIO get to 27.5, 25? Like I need to make more money than at $3 on this trade. If the guy can't prove to him that it can make that amount, he's going to say, take some off. We're going to take some off, and we're going to try to wean out. We'll keep short the 40s. We'll, you know, using the 40 puts, we'll stay short those. But these 35s, they're not doing anything for us.
Yeah.
Okay. So that psychology is what we're thinking about.
That's good. That's good to spot. Yeah.
And any questions from the
haven't seen many.
Adrian, do you think the SPY will ever go down?
Oh yeah,
fantastic question. I'm gonna say this. I'm going to preface everything like I preface this. I have no idea where the stock is going. I have no idea where the SPY is going. I have no idea where the market's going. However, what we're doing here and playing a game of risk reward. And right now, it seems like they are absolutely brutalizing anybody trying to buy downside puts in the SPY. They are taking, because the volatility is so low, it's attracting the buyers, and then it moves up 1%. And that 1% on a low volatility crushes these options. Okay. Now what happens is that there is going to be a situation where usually the way it works is it's the market kills as many people as it can. Okay. And then it's going to have this sharp move. That doesn't mean it's just going to go straight down. A sharp move in this environment becomes 1.5%. 1.5% would be $6 at SPY. That would be a sharp move. Probably holds a little bit there, for a little bit, and people think, okay, they start buying. I think the signal is, that you want to see that move down, and then if it doesn't snap back and you know people are buying, right? They're going to be buying every dip. They have been. So if they're buying that dip and the market doesn't actually come back, that's when it's going to make that next move down. That's when it becomes painful, and that's when the psychology of the market switches, and that's when you get this 5-10% move down. The problem is if you wait for that one move down, okay, the options volatility goes up very quickly on that one move down.
Mm-hmm.
And that makes it aesthetically not very interesting to go in there and buying those puts, because now the puts that you could have got for 80 cents and the stock is down, those same puts at the same strike is now $3, $3.50, $4, and you're thinking I should just bought them at $1. And now if you go reaching for further out of the money options, this is where you get chopped up. So the idea is that it's painful. You're trying to buy a little bit of time, and you're trying to just make sure that you are taking your stops, and you can roll up. We should have taken our stops. I've been loosey-goosey with the puts, just watching the tape for a while. We have this ABC setup. It's negated it at I was looking at 410 where I wanted to roll up. It negated that. It just kept going. It didn't even come down. So I was watching that. When it negates, it means it's super bullish. If the signal's telling you to sell there and it's not coming down at all, then it's telling you that I'm not the only one looking at this. The machines are programmed to look at this as well. So they're probably letting go stock there. And if it's not going down, that means it's very bullish. As it goes up here, it's up another percent from the 409, 410, 411. It's causing people to come in, and you can see that the market's getting a little bit tired. So I don't know when the market comes down. The market can come down at any point in time. But I would say that the risk reward is there. If you could just buy a little bit by 3-4 weeks, I don't think you're going to get a crash, but I do think that you can. I'm going to tell you this: if you get a 1% pullback, it's going to feel like Armageddon. Okay, I'm going to tell you that because right now the IV is so low, things are so low that the market is not expecting that type of move. So a 1% move, and you're going to get this like, whoa, it's going to be like things are crashing. Maybe the market moves 1%. That means all the little names are going to probably get hurt pretty good. 2, 3, 4%. So, I don't know. I don't know when it happens. I do know that it's, if we're long right now, we're playing. I think it's great risk reward, and we don't have many puts on a portfolio, and we're carrying a lot of high quality names, but even high quality names will go down if the market pulls back 1-2%. So this is something to think about. You don't want to just be long all calls. It's really not what we're trying to do. I've over the course of the last, call it week and a half, I've been riding a little bit long, and it's uncomfortable for me, to be honest. Okay, so I think that the SPYs will go down whenever they want to go down. I can tell you today, some of the names didn't look so good. The names that took us up, you see Facebook, you see Apple, look at Microsoft, look at Google, all names that Google's up a little bit, strong stock, Amazon down, 5 out of the 6 FANGs, and NVIDIA, Netflix, a lot of these FANG names were down today, and Tesla had that reversal. It was up and then traded off. So I don't know. It looks like we can get 1-2% move back, maybe. I'm concerned how that's going to look for some of the names that are out there. It's the market just keeps pushing and pushing and pushing forward. I suspect at some point we get a good drilling. I just don't know. The market does an incredible. It does an incredible job of getting people. It's like what do you call that? The tidal waves, right? The ocean is very calm, and there's a lot of danger. And we've been talking about that danger underneath the hood for a while. There's a lot of danger in there. And when this tidal wave comes, it's like, wow, and the first tidal wave is only 10, 15 feet, but it still knock you off your feet. So this is one of those situations where this can persist for months. It has. Go back for people to think that they can't go on for another month, just go back in time and see, how it happens. This is the best I can do and the best I could say about where I think the market is going. It's, I have no idea. I'm on record saying I have zero idea, but I do see good risk reward in trades right now. You're talking about 2 weeks ago, the market was trading sub 400. Now you can buy puts for the next month trading at $3, where if it goes back to 400, you're going to make 200-300%. That sounds pretty good. sounds pretty damn good to me. Everybody's getting along here. So this is the type of stuff that we look at. This is what we're trying to find. And as I speak, the market is starting to come off a little bit here. So I think you got to be careful for that one drop. If it doesn't bounce back quick, you're going to get another drop. Okay. And then you got this psychology going the wrong way. So be careful. All right.
All right. Fair enough. Thank you.
Awesome.
And guys, please like the video. Helps us out a lot. And subscribe if you haven't.
Thank you.
You wanna do one
more?
more? Yeah, we got some Chinese names, 2 Chinese education names.
Oh, the Chinese names.
That could be an interesting one to look at. Yeah.
Okay, let's do those quickly. What do we got? Which names?
EDU and TAL.
Whoa, EDU. I know these names are. There's a lot of talk of fraud in all these names. So it's like GSX, EDU, TAL, but the stocks have gotten killed. 19,000. They're buying these. It's interesting stuff.
Seems like
the vol change is only up a little bit, which is interesting. Okay, let's assume they're buying these for earnings, and let's take a look at EDU. No change. EDU. I did it again. Now I got Britney Spears in my head. Okay.
Oh, Felix.
Stocks coming.
Market just dropped like to 412. Yeah.
Did I drop?
Just a steep drop like this.
Oh, the stock?
Yeah, the stock market. Yeah, you should be talking more about it. We might get to 400 soon.
Oh yeah, there you go. A little bit. Okay. So EDU $20 high came off. This has a lot to do with, I believe, the Archegos, because they were long the GSX. This people think is a fraud. They've been trying to catch it with calls to buy on the upside. We've been negative on all of these names. We just don't buy that there will be a big bounce back. We don't buy. And this one, we talked about this extensively, where we said you can't look at the stock. This was artificial. This was Archegos and his buddy buying it to squeeze the shorts. They weren't buying it because of anything else to squeeze them. And so now, once you take that out, these guys, remember, they were back here talking about fraud. So that down to here is fraud. This name, I don't know if EDU was one of those names as well, but I would say, same type of business. TAL, what are they doing? Calls in TAL too? Same thing. It's trying to catch this bounce back, but you just got to be careful that maybe this wasn't real. This whole thing wasn't real here. This was, Archegos and his buddy and a few other guys, buying calls. That's the bear side. Okay, that's the bear side. The bull side is that you're dealing with 2 Chinese names, and they can print whatever they want, while a fraud is going on, or, frankly, they could just come up and say these are online education sites. So I suspect that, I give anytime there is, here's what I would say. Anytime there is a Chinese ADR name where there's like call buying, I give it an extra look. There's some level of, I want to be involved with that guy who's buying some crazy Chinese name, and why? Because there's a culture of insider trading in Asia. There's a culture of it. The guy Bill Wang from Archegos, he was fined for insider trading in Hong Kong, and he wasn't allowed to trade. So there's just a culture there that it's okay to do, and you don't really get hurt if you get caught. It's, you pay a fine and you kind of move on. But there was a study on how the top 1% in China, how their portfolios outperform everybody's portfolios, by a long shot. Like insiders, they trade and feed off this inside information. So, I don't think it's not legal. China's try to say don't do it, but I think it's so ingrained in the culture that if you know the answer, that you can go in there, they're buying calls and they're trading up a storm. So that's what I would say about those. But I give it credit if, Chinese ADR. So I'm looking at that and going, what do they know? And remember, if you think, okay, let's put ourselves in the shoes of the CEO or someone who knows the answer. They know what earnings are going to say. They already know what they're going to say for earnings, okay? Whether it's 2 weeks, a month or not, they know, right? If it's a fraud, they can only say more fraudulent things. So, you have to worry about that a little bit. So in the case like EDU or TAL, You have to, and I'm not calling them frauds. I'm not calling anybody frauds. I'm simply saying that that's what people are saying. That's what the shorts are thinking. They're thinking this about a lot of these types of names, online education China. And if you're the CEO and it actually, like, let's assume you're the CEO and it actually is fraud, are you going to come out and say, all right, guys, you got me, it's complete fraud? No, you're going to come out and continue the fraud, and the numbers might be great. And because they produce great numbers, who knows what could happen. There's nobody investigating them right now. They got a clear, I think the SEC took a look at them and they got a clear look, but who knows? But I do take, when somebody's Chinese names, I will give it some credence.
Okay, fair enough.
All right.
Yeah.
All right. I got to go. It's 2:05.
Okay. All right.
Cool. Hit
Thank you,
that button. Hit that like button for me. Thank you.
Thank you, Felix. Thanks, everybody. We'll see you tomorrow.
All right. Be good. Bye.
Bye.